In December 2024, Elon Musk crossed a threshold no human being had ever crossed. His net worth surpassed $1 trillion. Not a billion. 1 trillion, the headlines called it luck. They called it Tesla. They called it Dogecoin. The data tells a completely different story. In the next 8 minutes, we will break down exactly which assets drove that number, when we will run the signal score on the portfolio structure that built the first trillion, and we will show you the one mechanism most retail investors completely overlooked. Historically, when one individual accumulates this level of cross-sector equity, markets take notice, institutional rebalancing follows, index weights shift, capital flows change. Here is a real example. In January 2025, Tesla was added to the S&P 500 at full weight. That single event forced passive funds to buy approximately $80 billion in Tesla shares. Every index fund holder was now indirectly exposed to Musk's portfolio construction. In 2026, SpaceX is now valued privately at over $350 billion. XAI closed a $6 billion funding round. X Corp carries enterprise contracts from the US government. The Boring Company has active contracts in 3 US cities. This is not a story about one stock. This is a story about a multi-entity capital structure. Understanding it gives you an edge in reading the next market move. Let us be precise. Musk's wealth is distributed across 5 primary entities. Entity Tesla, TSLA S2, value 2024, T 400B key driver, EV plus energy plus FSD optionality. Entity SpaceX, private, ST value 2024, 350B key driver, Starlink, ARR plus DUD contracts, entity XAIst, value 2024, 50B key driver, Grok, AI plus enterprise licensing, entity X Corpest, value 2024, 19B key driver, ad revenue, recovery, plus gov contracts, entity The Boring Company Est, value 2024, 5.7B key driver, urban tunneling plus Vegas loop expansion. The critical insight: SpaceX alone represents roughly 35% of his total wealth. Most retail investors have zero exposure to SpaceX. It is private. That is the structural advantage most people simply cannot replicate. The data shows SpaceX generates annualized revenue exceeding $9 billion, primarily from Starlink. Starlink has crossed 4 million subscribers globally. That number was 1 million in 2022. But revenue is not the reason for the valuation multiple. The reason is the NASA Artemis contract, the DoD Starshield program, and launch monopoly economics. Historically, aerospace has been a government-dependent, low-margin sector. SpaceX broke that model. Reusable Falcon, 9 boosters, now land and relaunch within 24 hours. That reduced launch cost from approximately $54,000 per kilogram to under $12,700 per kilogram. Based on the numbers, no competitor, not ULA, not Arianespace, not Blue Origin has matched that economics. SpaceX now handles approximately 70% of all payload mass to orbit globally. The question is, how do ordinary investors access this? The honest answer is indirectly and imperfectly. Some SpaceX exposure exists via funds like ARK, Space Exploration ETF, or select pre-IPO vehicles, but the core equity remains locked to institutional and insider holders. Tesla's stock performance in late 2024 was not driven by earnings. Q3 2024 revenue came in at $25.2 billion. Margins were compressed. Deliveries missed estimates. What moved the stock was a political event. Musk's public alignment with the incoming US administration triggered a re-rating thesis. The market priced in regulatory tailwinds, AV approvals, FSD federal framework, energy incentives. Is that rational? Historically, political re-ratings are mean reverting within 12 to 18 months, but in the short term, the data is clear. Sentiment drove valuation, not fundamentals. Compare this to NVIDIA in 2023. NVIDIA's re-rating was backed by earnings beats. Revenue grew 122% year over year. Data center revenue quintupled. That is a fundamentals-driven re-rating. Tesla's late 2024 move was not. The distinction matters when you are sizing a position. One factor consistently underestimated by analysts: the value of political access. Amazon built a $90 billion cloud business partly because AWS won government cloud contracts. Microsoft. Azure followed the same playbook. Musk's Department of Government efficiency role in 2025 gave him direct budget line visibility. Simultaneously, SpaceX expanded its Starshield classified satellite network under DoD contracts. The Boring Company entered a contract for tunneling infrastructure in 2 additional US cities. This is not a coincidence. This is capital allocation following political access. The data shows that companies with direct government relationships trade at valuation premiums. Based on the numbers, Lockheed Martin trades at 18x EBITDA, Raytheon at 17x, SpaceX, if public, would likely command a premium to both given its growth profile. We are not scoring any single stock here. We are scoring the portfolio structure as an investable thesis. Factor, business quality score, 8-10 evidence, SpaceX has monopoly-level launch economics. Tesla has branded manufacturing scale. xAI is early stage but well-funded. Structural moats exist across 3 of 5 entities. Factor, valuation score, 5-10 evidence. Tesla trades at 80x forward earnings as of mid-2026. SpaceX's implied multiple is aggressive for a private company. xAI has no public revenue. Significant premium baked in across the board. Factor, momentum score, 7-10 evidence. SpaceX. Starlink, subscriber. Growth continues. xAI Grok user base expanding. Tesla Cybertruck ramp ongoing. Macro tailwinds from AI infrastructure demand benefit xAI indirectly. Factor. Risk score, 4-10 evidence. Key man concentration risk is extreme. Single individual controls all 5 entities. Regulatory risk elevated given political profile. Tesla margin pressure from Chinese EV competition remains unresolved. Factor. Sentiment score, 6-10 evidence. Retail enthusiasm remains high. Institutional positioning in Tesla is mixed. Hedge funds reduced exposure. Q1 2026 social media amplification artificially inflates short-term sentiment scores. Total signal score 30-50. The business quality is elite, but the valuation, key man risk, and political dependency create a risk profile that demands extreme selectivity before building any exposure. Mistake. 1. Treating net worth, headlines, as buy signals when. A headline announces someone became a trillionaire. Retail investors often chase the most visible stock, in this case, Tesla. The data does not support Tesla as the primary driver. SpaceX was the dominant contributor to the milestone, and SpaceX is inaccessible. Mistake 2. Ignoring private equity structure. Approximately 35% of Musk's wealth sits in an asset the public cannot directly buy. Retail investors replicate only the public portion. That is a fundamentally different risk-reward profile. Historically, concentrated positions in public equities tied to private company founders, underperform the private companies themselves. Mistake. 3. Confusing political access with business. Moat government relationships create short-term valuation tailwinds. They are not permanent moats. Based on the numbers, companies that re-rate on political access alone typically give back those gains within 2 fiscal years. Amazon, Microsoft, and Palantir are the exceptions because their government revenue is contractually recurring. Tesla's political tailwinds are regulatory, not contractual. That distinction is material. Mistake 4. Overweighting social media sentiment. Musk. His social media presence amplifies retail sentiment in ways that distort normal price discovery. The data shows retail volume in TSLA spikes 40–60% on days Musk tweets about the company. This is noise, not signal. The signal score framework separates the two. Here is the one thing to take away from this analysis. Musk became a trillionaire by building irreplaceable infrastructure at the intersection of space, AI, and energy, not by picking stocks. The lesson for investors is not to chase the milestone. It is to understand the structure that produced it. Private equity concentration, monopoly economics, government contract leverage, those are the 3 variables that matter. If you want to see the full signal score on SpaceX's closest public proxy, Rocket Lab, it drops Thursday. Subscribe and turn on notifications.